just want to speak to economist Stuart Thomson. He's actually in charge of international bonds and currencies at Ignis Asset Management, which oversees £75 billion. He joins me from Edinburgh. Stuart, good to talk to you. Thanks very much for coming on. So, a bailout for Portugal, inevitable now?
Yes, it is inevitable. The Prime Minister said they have enough to repay the April bond redemption, but they won't have enough to repay the June bond redemption. So sometime in the second quarter, Portugal will be forced into the debtor's prison that is the European Financial Stability Fund.
What does that mean for the risk of contagion, Stuart? What are you anticipating after that?
Well, we think that a great deal of time and effort has been spent on isolating the three weakest, smallest peripheral nations in order to protect Spain. That has done very well. Money has flowed into the Spanish government bond market. In fact, we think a bit too much. It's probably run its course. But we don't think Spain is bankrupt. We think that Spain probably needs about €100 billion to sort out its banking system. If it was able to temporarily borrow from the European Financial Stability Fund without the stigma of this debtor's prison, it would be very good for Spain. However, the stigma is going to prevent it from going anywhere near there.
You said they need €100 billion. You mean that, presumably you're talking about them tapping the ESF if they can't raise that money in the markets?
Yes, they need to sort out the banking system. They can't keep extending and pretending and minimising the cost of what needs to be done. We think if they did that, in one go, it would be very positive for Spain. The reality is they'll do it piecemeal, as much as they can afford each year, and that means the situation will drag on and drag on.
The interesting thing, Stuart, is that when you look at borrowing costs for Spain, we're not seeing the same spike in bond yields, the same concern investors have when it comes to, say, Portugal, Ireland, Greece.
Yes, because I don't think Spain is a factor for default. The other countries will have to go through some form of debt devaluation. Spain doesn't need to. Spain has a temporary borrowing problem, which can be solved easily from the European Financial Stability Fund if it so wishes.
So what have you been doing and what do you plan to do? Are you buying these bonds?
We have none of the three weakest peripheral government bonds. We are neutral in Spain and Italy, but we are looking to underweight Spain in the next few weeks.
What do you find attractive in terms of investments? Where would you say you're overweight?
We are overweight in the core, what we call the core countries, the real pairs, the AAA, Germany, Holland, Finland. These are the countries where the objections have come, because these are the countries which are most likely and have the greatest ability to pay towards the European Financial Stability Fund and its successor.
Yeah.
We believe these are the countries to overweight.
You haven't mentioned Ireland yet, Stuart. What happens if senior bondholders are forced to share in banks' losses?
You see further downgrades for the country and wider spreads for Irish government bonds. We think that is inevitable.
ECB's talking about raising interest rates soon. Is that a good idea, particularly given your concern about those southern European peripheral indebted nations? Could it derail an already fragile recovery in Europe?
Yes, it could. We think that it will do it, but when it comes to making policy errors, the ECB is always at the front of the queue, as it proved in 2008.